what is today's market? Is it a fast-growing market, a stabilized market, or the price is coming down? So the question, first of all, I have to ask myself is, has the market changed? Yes. Compared to last year, the market has changed based on the information we have. So I quickly run through with you. According to URA, the prices of landed properties increased by 1.1% second quarter, quarter on quarter. That means the prices have stabilized. For non-landed, which is condominiums, private apartments, decreased by 0.6%, which to me is stable. It's kind of flat, right? So the prices have stabilized. Then when we look at, there was an article on CNA that new private home sales volume has fallen 47.6% in August. Of course, this is Hungry Ghost month. There was not any major launch, so the volumes would have dropped. We have to wait and see. I think there are still people in the market looking for new developments, a good price, good size and good location. We'll have to wait and see. When we look at condominium volumes, right, if you compare to last August, compare this August to last August, even though it's 7 months, there is a drop of 25%, nearly 25% in volume, and prices have stabilized as I showed before. And then when we look at HDB still there is growth in volume, and if you look at prices have kind of stabilized. They're not growing as fast as before. So again, I consider that a stable market. And when we look at landed property volumes, August compared to last August, went down by 29.14%. Prices still climbing. I think for good landed properties, there will still be buyers at a good price. So that to me is again a stable market. It's probably growing a little bit, but not crazy like last year and the year before. So that's my conclusion. The conclusion is that the market is stable. So when we look at a stable market, how do we price our property when we want to sell? So today I just want to discuss with you, how can I price my property for my clients who are seriously selling, right? So hopefully I give you some insights. So the question is, in a stable market where we don't expect prices to climb or for the prices to drop, today if my client wants to sell their property, how do we price it? Actually, it's pretty straightforward. If you look at, basically do an analysis on similar properties and see what they have transacted before. Let's say, give you an example, let's say $1 million. So plus minus $50,000. So if you went into the market, in a growing market like past 2 years, you can maybe ask for 1.15, 1.18, and hopefully there's a lot of buyers in the market and they will come in and give you higher, 1.05, 1.08, $1.1 million. But in today's market where the number of transactions have actually come down, and I can honestly tell you, there are many sellers and not as many buyers. So in this market, $1 million, if that's the transaction in the past few weeks for a similar property, I would still say price higher because you need space to negotiate. So look for similar properties, renovated, not renovated, floor, high floor, low floor, mid floor, location within the condominium or in the landed property area or in the HDB block, and then price it slightly above so that gives people some space to negotiate. And I would still recommend my buyers, my sellers to close at a price that is same as yesterday or maybe slightly higher, right? Unless you're in a location where there is no demand at all, or you have a property that is not commanding that kind of demand and you don't get many buyers coming in, then even if you exit slightly lower than yesterday, remember we are at a peak of the market, so you are still winning. So my suggestion in a stable market to price is really do a deep analysis on similar property transactions and price slightly higher. I do have clients who want high price, still want a very high price, and for whatever reason, they instead of 1 million, they want 1.1 plus. So when it comes to clients like that, I always say, okay, we can test the market. That's the best way. Test the market. put up the price that you want, test the market for a month or maybe 2 months and see if there's someone willing to buy at that price. If yes, then good. If you're not getting it, if you're not getting the buyer's interest and the offers are not coming in, then I will always recommend let's bring it back down to a more reasonable level. If that's what you want to exit now, take your profits and move on. If not, then you become a speculative seller who's only interested in a very high price buyer. Then you have to hold in the market for a longer period of time. But I think the sentiment right now is sell at a reasonable price, negotiate a better price than yesterday. I think it's still possible. So my suggestion in a stable market is price reasonable, price higher, but so that you give yourself space to negotiate, but don't price too high. Unless you are a speculative seller, then go ahead and price very high. Hopefully you get a buyer. There is no reason to price lower in this stable market. So that's my conclusion for a stable market. Remember, talk to your agent about it. Come up with a reasonable number. You can exit, you already made your profit, you can move forward. All the mathematics works out. Then hopefully you get a buyer who's going to pay you slightly more than yesterday, or maybe the same as yesterday. The market is still okay for same as yesterday. So that will be my suggestion for a stable market.